All right, welcome back, everyone. Welcome to Ask Me Anything, our weekly show where we answer all your questions about infinite banking, finance, investing, and everything else. So get those questions over in the chat box. We'll get started with those.
A lot of y'all know us over here. My dad is Brent Kessler, Mama Terry Kessler, and so I'm really second generation to this infinite banking concept. We've been practicing this since 2008. Heard about it in 06, thought it was too good to be true, so never started till 08 because some of our colleagues and friends had to go out and be the guinea pigs first, getting into all of this. And, since then, us getting into it, you want to share the message with your family members, your friends, and other people. Well, I actually have it. I think I would call her my second cousin because she's my mom's cousin. And so she would be second cousin to myself. And I'm going to put her on blast. Her name is Nicole. And Nicole had a policy, started it back in the day, and she actually surrendered that policy. And the reason that she surrendered it is because her dad, so my mom's uncle, and then also my mom's dad, so my grandpa, they were in her ear saying, Nicole, why do you have that policy? That is stupid. You shouldn't have that. You're going to see the Kesslers on American Greed because of all the BS that they're putting out there. And probably some of us over here are mentors. You probably hear that from your family members. So Nicole, because she was listening to all this noise in her ear, she surrendered her policy back in the day because they were coming to her and saying, well, hey, Nicole, instead of you doing this policy, look right here. If you put your money into the stock market, look what happens in 17 years from now, what you're going to have in the stock market. And y'all, as you guys know, no, the policy is not the investment. It's the and asset. I'm going to store and run my money through the policy. And then if I want to, I'll go put the money into the stock market or whatever investments that I like, know, and understand. So now Nicole is coming back because she sees all of the stuff that my immediate family is doing over here with the policies that we're able to purchase, the investments through the policies and different things like that to take back our time freedom and creating more passive income streams that are coming into the family. And now she's kind of coming back and saying, well, hey, I'm stupid. I knew that Terry would never steer me wrong. I should have never let this policy go. And so now she's coming back saying, Hannah, I want to start my policy again. And just think about it. If she would have never stopped, she would have been 10 years plus into this thing with the uninterrupted compounding of what were to happen. So I'm telling you, my dad has said this, and he says it all the time, that sometimes you need to fire your friends and your family members because they are the biggest ones that are holding you back from your true potential. And I get it because they're the people that they want to see you not lose. They want to protect you. And they think that their mindset, they're doing something out of, pure intentions and a good heart. But I'm telling y'all right now, people do not understand this concept because they've been so engraved with that conventional thinking and wisdom. So I want to read y'all here something. So every morning I look at my daily devotion here. And so for Wednesday, July 31st, I'm going to read this short paragraph here. It says, when you start to take steps of faith and see God's favor, it's amazing how that can stir up other people's jealousy, criticism, gossip, and slander. But God has put greatness in you. He's called you to stand out, to be a difference maker, to take your family to a new level. You're going to have to be thick-skinned and determined to not waste your time trying to win people over who are not happy when you succeed. Just stay focused on what God has called you to do. I'm telling you, even in my own family, with us being over here with 30 plus in the Kessler family banking system, I still hear that same BS from my own personal family. So if you've ever heard the saying, you can't be a prophet in your own town, it is so damn true. Pardon my French, but I mean, just keep hanging around the people. Take the advice from the people that are living the lifestyle that you want to live. Stop taking advice from your broke ass brother-in-law who thinks that they know everything that there is to know on this world and leading you down that direction. So that's my big PSA for today. Anyways.
Amen. That was awesome. Thank you, Hannah.
That was awesome. So your aunt was the in the bucket of crabs, and she tried to crawl out, and everyone pulled her back in.
Yep.
That's what happens. People want to pull you down because they don't want to see you grow because it makes them uncomfortable.
Yep.
All right, love it. We do have a couple questions, but we definitely want more questions. Like Steven said, usually at the end of this call, we have more questions than we have time for. So don't be shy, get them in now. So Nick is saying, I forgot the name of your guys' website where people go with money, are looking for people with deals, Private Money Club. And then he said, on Private Money Club, what are some things investors would be looking for other than a ROI?
Is he talking about from the lender side, the borrower side? Well, I guess it doesn't matter. So
we see investors, so I would assume from the borrowing side.
Yeah, I mean, so either side doesn't matter. But what most people are looking for on Private Money Club, and one of the reason people love Private Money Club is it's not always the returns, but it is the relationships. So and we hear this from both sides. Like we hear it, the borrowers love their lenders. They love that they're helping their lenders grow their self-directed IRAs, for example, and nice, steady, consistent returns. They love how they can help them use their banking policies to take loans, make the spread, do the lending safely, securely, just like a bank does. So they actually are being the bank by doing this. So lenders love it. Borrowers love working with the lenders. The lenders love learning about real estate, learning about what borrowers do, how their investment companies operate, and just those relationships. So it really is more than a lot more than just the returns and the people that are in there in the community. And Carson, you've used it quite frequently. I mean, what would you say?
Yeah, I was going to say the same kind of thing. So I actually even personally have some deals I'm working on right now that I'll be raising money for soon. And it's the same kind of thing every time. But most people on PMC are doing similar things that I'm doing. We're finding real estate deals that we're either going to flip, we're going to do the BRRRR method with, or maybe even buy and hold. And we're buying these properties, and we all need to raise money to buy more properties. And so if you have funds available to invest in your policies and you want a solid, steady return on a monthly basis, you could then use those funds, lend to someone like myself looking to flip a home, and have your funds working in the project. You can be, even in first position or second position on the home, depending on the deal size, and have the collateral in your name and the title in your name, and have your funds invested in the project getting a steady return. And so you obviously, like Steven said as well, you want to work with someone you trust, someone you know what they're doing, and do your own due diligence as well with whoever you're working with. But Private Money Club for me has been awesome because I've lent money on deals and I've also received funds on deals that I'm doing. And so I can attest to the amazingness of it and the opportunity it brings you, because I talk to people all the time and they're like, I want to invest, but I don't know anyone who does it. I don't know how to find a deal. Well, it's like, here's a built-in community of other people just like you looking to be in real estate. It's like the perfect little situation for those who don't have that community around them that do real estate, that invest regularly. And so just like Hannah said, with family members that aren't involved at IBC or support IBC, same thing with lending. You might have people who don't know what lending is, or knowing that you can invest from your IRA or you can invest from a policy. And so being around also like-minded people, like Steven said, is exactly what you're looking for at PMC.
And I would just add, we can move on to another comment too, but I would just add, besides our ROI, people are looking for confidence. So if you're the borrower, the more you can share about where somebody's money is going, how your business operates. They don't just want, a return on their money. The more you can teach them, I mean, they love education. So the more you can educate your lenders on what you're doing and where their funds are going, that will go a long way. Okay. Justin saying, what do you need to do before doing a deal? If you're lending money, he said, need to set up an LLC. I know that, but anything else like a lawyer to draw up terms and stuff? I know you can't just make a deal right away.
You don't necessarily need to create an LLC to lend. If you're borrowing money 100%, you can only lend to companies. But to lend, I mean, you can use a self-directed IRA, you can use cash. It just depends on your strategy. I mean, there might be some states that require something like an LLC or a license, but so just make sure you check where you are. As far as the contracts, we have different samples for you to study. We have, different coaching programs. If you really want to kind of dig in and learn more, we have hands-on training programs available. One called Accelerator, which is, definitely where you'd want to start. But typically the borrower is going to be the one that's going to provide the contracts, and, you're going to put that cost on them at the very least. Even if you want your own attorney, just work out negotiate to where the borrower is the one's paying for that to happen. So just some little pointers right there.
Correct. So how can I, as a middle-class teenager, have a proper policy? Well, also, welcome. If you're a middle-class teenager, I'm so happy that you're here.
What is a middle-class teenager?
Yeah, that's what I was going to say. I've never heard that term before, but I'm going to assume teenager means under the age of 18. So under the age of 18, like this one right here, you can't own the policy directly. A guardian has to own the policy directly until you reach the age of 18. So if you're looking to own a policy on yourself, eventually learn as much as you can right now. Learn, because right now is the best time at your age to learn about this. If you want to get a policy, then you'd have to look at, what are the options for a guardian to get a policy, or there are some unique situations where you can get one, but very unique.
Hey, and then what I would say is that I actually started my first policy at 18. I was still a waitress. And at that time, I was saving up about $100 a week into my savings account at the bank. And so Dad came to me, because you got to be 18 in order to own a policy. Even if you're under 18, you can have a parent own the policy on your behalf and kind of work it out that way. But you got to be 18 to own a policy. And so Dad says, hey, close your savings account. You're doing $100 a week into it right now. We're going to change this, and you're going to start your first policy $400 a month. So that would be my advice, is whatever you're saving, start the policy with that, whatever you're saving monthly. And then reminder, y'all, because you can pay premiums monthly, quarterly, twice a year, or annually. And you can always even update those modes of premium. If you start your first policy monthly, but then later on down the road, you want to switch it to quarterly or annual, you have that full freedom to bounce back and forth between the modes of premium. But that would be my advice, is just look at it as you forcing yourself to save. It's just your glorified savings vehicle. That's all that it is.
Yeah. I know the youngest person in Carolina I had, they were turning 18 the day after I was talking to them. So they were all excited to do it. So yeah, learn as much as you can.
And if you have brothers and sisters, recruit them into that conversation with their parents too. They're going to ensure you all do the same.
Oh. Justin, we met at Larry Steinhaus event. I'm coming back up to Steinhaus's event next month, August 17th on Saturday. Ask Larry these questions. Larry's there to help support you. He would really turn you on to good resources, but I'll tell you right now, he's going to tell you, no, you don't need an LLC to start doing all of this stuff. And if you go back to my podcast show, the Money Multiplier podcast, I did an interview with Larry a few months ago, but that's one of the questions that he asked, because I hear that all the time. Hey, do I have to have an LLC to start investing? No. So go talk with Larry. Talk with Stephen Nagy and the Private Money Club people. But you're right there in Larry's neck of the woods. Go and chat with him just one-on-one.
Love it. Steve is asking, how long does it take to set up a specially designed policy? And he said months, ? He's 64.
It can be fast. It depends how fast they can go through in a couple weeks. On average, 4 to 6 weeks. You're at 64, you will have a paramedical. So you will have a nurse either come to you or you will go to them. They will do your height, your weight, your blood, your urine. Just make sure you're as pretty on the inside as you are on the outside, Steve. And then, so it depends on how fast, how motivated you are to go through the process, but it can be fast. First, you'd have to book a call with one of us great mentors, and then we'll walk you through the process.
So Nick is saying, can you use qualified money to start a policy?
The answer is no, Nick, you cannot. And policy premiums are non-qualified dollars, so you cannot roll them over one to each other. If you were to use qualified money accounts, like a 401k, for example, you'd have to completely withdraw it, pay the tax and penalty if there were any, and then you can roll it over now into the policy and use that to pay the premiums. So it would depend on your situation if that would make sense to do. You also might not be able to. If you're with a current employer, you have a 401k there, you might not be able to touch it for some time anyways. So it would depend on your situation if you'd even want to do that. But just to answer the question, no, you cannot roll it over.
Okay,
Yeah. And to elaborate on that, I'll share a client call that I had last week on this same topic. This client was in their, I want to say 30s. And so they were doing the math. And this is not financial advice. We're not financial advisors, but this is just their analysis, is that they realized that if they took the money out of the policy in their 30s, paid the penalties, put it into a policy, it would grow at a level that they felt was significantly better or more than the 401k would. And they're not paying taxes on it. Whereas the 401k, when they take it out, they got to pay taxes. So it's an age thing too. Like, how long do you have ahead of you? If you're 58 years old, of course you wouldn't want to take the money out and pay the penalties, because you wait one more year, you don't pay the penalty, so you save 10%. So it's a math thing, right? Math is math. And this person was looking at is the 401k is unpredictable. You don't know what it's going to be tomorrow or in 5 years. With infinite banking, you have a pretty good idea of what it's going to be because it is consistent, right? So lots of different things to take into consideration with that question.
I'm going to argue. I'm going to say math is not math. 1 + 1 = 3. I've been teaching Connor that since he was like 4 years old. If you think you could have exponential growth and return investing in yourself, or take the money out, paying the penalty, and starting something with it, if you have a plan, then go for it. It's really up to you. Like, we're not telling you what to do. We're just going to teach you what you can do and what you can't do. So Carson's 100% right. You can't 1035 it, can't exchange it. It's not like to like, but you can do a lot with it other than locking it up in money prison. So
okay, and then in that same vein, another question is, so we just talked about if you can use your qualified money to start a policy. Another question is, can you use money from a HELOC to start a policy?
Before Joe starts clicking and popping, I'm going to say that it has to make sense. I'm working with someone right now who wants to take out, potentially put in $85,000, $100,000 dump in from his HELOC, because he has $400,000 or $500,000 locked up in there, but it's at like 8.5%, 9%. And so, like, it's variable. That's a big amount to have come out of there. And then you have the policy loan. You have to make a big spread. Like, you're increasing the amount of risk in my eyes that you have to take. Why not just move that money into a deal, make the spread there? I want to hear what Joe has to say about it, but I don't know if it always makes sense. It kind of depends situation to situation.
Depends on the spread, just what you said, the arbitrage. What's he going to put it into? If he's going to take it and put a roof on his house, then no. He's got to take it and make money twice with it. I make money once in my policy, and then I take it and I move it into an investment. When that investment comes back in, I roll it into another investment. When that investment comes in, I roll it into another investment, and then I put it back into my HELOC. So I'm 4Xing with 4 different investments before it even comes back. So you're not going to beat the spread on any of that.
Hey, let me add too. A lot of people ask, hey, should I take HELOC money, do a dump into the policy, then pay back the HELOC? I like the thinking, but to be honest with y'all, no, I wouldn't do that. You're just moving money from your left pocket into your right pocket by doing that. The only time that I would use HELOC money into the policy is if I can go and put it towards investments that's going to create me the arbitrage or the spread, like Joe was saying, or use it to almost do like a debt consolidation, go pay off these debts that I have that's going to free up more of my monthly monies that I'm sending to the debt people, that's going to free up more of that than what I got to pay the banker back for monthly payment. Hey, also, I do have the Instagram pulled up on my phone. I got one.
You can see the questions?
Yeah, can I talk about this one?
Yeah, and then real quick, I just want to say, some people were asking, how do you book a call with our team? You go to mentors.beyourownbanker.com and you'll get, it's around Robin, so you'll get either one of these fine people on this call you'll have a call with. But go ahead, Hannah.
Okay. So one of them was, if we own a business, how can we make an infinite banking whole life a tax deduction? If it's an employee benefit, can it? Any ideas on how to categorize it? Number one, we are not tax professionals. Go talk to your tax advisor there. But I'll also say this, number two, come out, y'all. If you guys have not heard already, every year we hold a 3-day live masterclass. It's October 10, 11, 12, Nashville, Tennessee. And so come out to that, because we're going to get deep into employer using policies for their employees, because my dad did this in his chiropractic offices. But can the premiums be counted as a tax deduction? It could be. The monies that I maybe, instead of having my employees put money into a 401k or those qualified accounts and they're doing the policy instead, yes, it can be. Because there was another question that came through on the Instagram. Oh, it's not here anymore, but it was talking about, can I, can I, instead of having my employees do like a 401k, can I match them inside of the policy? And yeah, you can do something like
Check.
We hear you, Chris. So
Check.
Gotcha.
We hear you.
Mike is working.
So like even over here, like
I'm doing two things here.
Team and our mapping team, we actually will match them on the premium that they want to do inside of their policy. And all
Check.
we do is we just
Check 1 2.
that premium into their checks that
Check
we
1 2. Check 1
Got
2.
it.
Hey Steven, you know who else I'm gonna throw a brick at?
No,
All
Chris,
right.
we can't hear you. We just need to see you. That's all.
You should start rhyming now.
Chris keeps asking. Look at him in the chat.
There he is. All right. I'm gonna.
Now that's Joe.
That was cool. Okay.
Wow. Is this like Groundhog's Day or April Fool's? What's
There's a
happening
full
here?
moon tonight.
We're okay. All right, I'm gonna pick one more question. We'll go back, and then we'll go over to Instagram real fast. But so Brian is saying we have money in a HELOC and also in a self-directed IRA. Do we need separate policies for each funding source?
No, depends. Depends what you're trying to do and who's the insured, and if there's more than one insured. But the short answer is no. You don't.
Or I'll say it in this manner, y'all. Don't overcomplicate this stuff. I'm telling you, it's that stupid simple. All right. So there's some people that like to have their policies for specific needs. Hey, this is my policy for my kids' college education. This one's for my taxes. This one's for my charitable giving. Sure, if that's how you like to operate, you like to have different policies for that specific needs. Sure, set it up that way. I'll tell you, I don't do it that way. I think about my policies as it's just a branch office of my bank. Doesn't matter what Wells Fargo I go to. I can go to the Wells Fargo on Main Street or I can go to the Wells Fargo on 3rd Street. Doesn't matter. As long as I got a policy that's got cash in there and I can use the cash for whatever I'm looking to use it for, I'll go and pull out that money and then go use it for that specific need. So the KISS principle, keep it stupid simple.
Okay, beautiful. Do we want to go to more Instagram questions?
I got
Okay.
nothing more.
I got them. There's a bunch over here. Cuban Green Go. I'm a property manager for a private owner. Currently manage about 650 units for this owner. I would like to venture out on my own. Do I set up a company where I invest in properties for investors or their properties? I mean, that's kind of, I think it says or their properties, something like that. I mean, I don't really understand. Do you understand that question? I mean, just from the surface, I mean, if you're managing that many properties for somebody else and you're looking to go on your own, just set up an entity, figure out the right structure, working with your CPA or someone like Corporate Capital that can advise you and give you advice on how to properly structure your company that suits the business needs that you have. And then after that, I mean, start buying properties if you want or manage other people. Sounds like you manage other people's properties now. So that's probably the most natural place and easiest low-hanging fruit. So just start going out, finding your own clients to manage their properties. If you're already doing that, that's something you know, like, and understand. So I think you'd probably have a lot of success with it. That's the best crack I can take at it. And there's another one, Knox 714. Can I fund a policy for somebody else? Did you get that one?
No.
Okay.
We can hit that.
So let's let somebody hit that one.
Yeah.
Brian, go.
What was the question? Can you insure?
Can you fund a policy for someone else?
Yeah, of course you can. You can insure a person that you have insurable interest on. That's the kind of the catch is you have to have insurable interest on them. So it can't be your neighbor Bob down the road that you don't do anything with, but it can be a business partner, family member, etc. And the reason why they do that is because it's about financial loss at the bottom of the line. It's life insurance is replacing a financial loss. So it has to impact you essentially. So that's the short answer. But it's very common for people to insure their spouse, their kids, grandkids, business partner, those kinds of people, because it makes sense from an insurance standpoint and also from infinite banking. There's lots of reasons why you might do that as well.
Love it. Here's a question. Navigate Your Venture says, do you have a line of credit backed by your life insurance so you don't need to get lost in the details of which policy you need to pay back.
This is a good one for Chris, how Chris is doing things, right? So
I know there's going to be a good section on this too. We're going to spend a lot of time on this actually next weekend at the 2-day virtual class.
Yeah, we're definitely going to be covering this a lot. Yeah, I mean, I have a CV line of credit, have for a while. All my policies feed into it. I actually just linked my Guardian policy to it as well. So I just got a nice raise on my CV line of credit. It's all backed by collateral assignment with the life insurance. That's exactly your reason. Navigate Your Ventures is exactly the reason why I use it, because it is more expensive. I will preface, like, most people will never use a CV line of credit in this interest rate environment, because remember, banks and CV lines of credit are tied to prime rate. Insurance companies' loan rates are tied to the LIBOR bond index, which is a much better tie right now where interest rates are high. My CV line of credit is at 7.5%. You can borrow from the insurance company between 4.8 to 5.5%, give or take a percentage point or two, or a basis point or two. So you can see it's a lot cheaper borrowing from the policies, but it's a headache. So I use the CV line of credit because it allows one central point of check writing. So I can write a check which pulls from all my policies, and then I can pay back my recycle recapture to one central point. The convenience and the speed and the volume of which I'm using my infinite banking stuff, my policies, works for me with the CV line of credit. But for most people, paying 1.5% or even more than that, more than what you can borrowing from the insurance company, just makes no mathematical sense.
Hey, can I speak on the other end just real quick? I'm opposite to Chris. I don't use any cash value lines of credits. I'm trying to get the bankers out of my life. That's rule number 3 of Nelson Nash, as he talks about don't do business with the banks. Yes, I understand there's a little asterisk there. I'm not going to get deep into it right now. But I borrow directly from the insurance companies. And anytime I put money back, I just pick whatever policy I want to go pay back that money into. And how I keep track of all of this, I have a spreadsheet. It's an Excel spreadsheet that I keep track of everything on. It's very simple. Nelson Nash did the same exact thing, tracking his 52 policies.
Yeah.
I don't want people to get confused with either of those, right? Like, you can do whatever is going to solve the problem best for your situation. Like, Chris is super disciplined. Like, as soon as he has cash flow from a deal, he's paying stuff back. He has everything set up that way, where other people, depending on how you're borrowing, what you're borrowing for, you might need more flexibility. So tying it to a line of credit wouldn't be the best idea for you to do. You want to borrow from the life insurance policy where you have more choices, like Hannah's talking about. So
Hannah's way is the most economical way to do it by a long shot. It's just, I just have lots of cash flow and different things happening at all times. So I often pay off my line of credit totally and then just restart it over when I get the next lending deal. And that's not what I'm doing right now. I'm using a lot of it, but yeah, it's just more expensive. You just got to understand that.
Very nice. A couple questions.
Like KISS, keep it simple, silly. Keep it spreadsheet silly. It's easy. Craig can help.
You got that right.
Keep it stupid simple. World. Remember that.
All right. Here's one from Fern. So Fern's one of our PMC members. How do I help my young adult daughter who's 24? She's constantly asked for money when she's short for rent. She won't have money for a policy and will likely not be interested in one and won't listen to me. Go ahead, Hannah and Jason.
Tell her no when she asks for money.
It's time to get off the nipple. Oh my God. No, I'm telling y'all, my dad, when all of us kids turned 18, love it or hate it, but he says, now that you're 18, it's no longer my responsibility to keep you alive anymore. All of my siblings, we have all gotten fired before from the family business, and we had to go out and figure out how to make it on our own in our own life. Sometimes you just got to do that. Honey, I love you, but you got to get off the nipple and you got to go figure it out on your own. So I know that's the more brutal response to it. I know you're there and you want to help her, but hey, do you want to keep funding her rent when she's 36 years old and having to come and live in your basement now? I mean, it just may be the time to start having those conversations. And that's a 24-year-old talking to another 24-year-old.
It's time. It's time. For sure. We're raising adults. So we have to have them fail a little bit, make mistakes, and they'll figure it out, right? So
yeah. And I
got some IGs when you're ready to.
Yeah. And I do just want to point out, Hannah Kessler is only 24. So she really is saying that from 24-year-old to 24-year-old. Go ahead, Chris.
All right. We got F_N_Kai. So how can we borrow from a policy? What kind of policy is best to look into getting so that I can borrow?
I'll start. I'll say the best policy you can get is one through us. So I'm going to put our little link up here while somebody else
There
answers.
you go.
Go ahead.
I mean, the simple answer is it's a permanent dividend paying whole life insurance policy with a mutual insurance company. That's it right there. So, but it has to be specially designed. That's the huge.
That's the key.
Yeah. That is the key right there, because I had somebody today, by the way, this is with a company that we work with, insurance company. It was an agent that we don't know. And this person came to me because they heard me or either Chris or myself on one of our presentations talking about this specially designed. And they came to me and said, hey, here's the policy. And I just told them straight up, that is a horrible, horrible infinite banking policy. And it was with one of the biggest companies, and it was high commission based, low PUA based. And I literally in 30 seconds flip-flopped it and showed them an opposite illustration. So it's specially designed. So
that's the most important thing, and that's what I was kind of hoping somebody would mention is you can't just go out and buy yourself a regular whole life from your broke-ass brother-in-law and expect to be able to borrow from it immediately in the first 30 days. These are specially designed and engineered, as Brian mentioned, for what we do. And if it isn't designed and engineered, or you don't work with an agent or a company that knows how to design and engineer them, you're going to get a policy that's going to have no cash value in the first couple of years, or worst case possible, somebody's going to sell you an IUL, and you're just going to be hating on all levels.
And even to add on to that, I asked this person, I said, hey, when you were talking to that other agent, did that agent ask you, what are we trying to solve here? What's your problem? What are we trying to solve? He's like, no, they didn't ask me anything like that. And I said, that's a problem. Because if I don't know what I'm solving for you, I can't design the best policy for you, specially designed.
So Brian, what are some of the common things you hear that people are trying to solve? So what are some of those examples?
So debt. So recapturing debt is one of the biggest ones. And so this person was trying to recapture debt. They knew the concept of infinite banking. They have some lump sum capital, but they don't want to pay it out to the credit card companies. The other one is for investing in real estate. So between now and retirement age, they want to build retirement funds inside infinite banking, but also leverage the cash value to go and acquire cash flowing assets so they can have multiple sources of income in retirement. I mean, those are two very common things. The other one is for savings. So a lot of people realize that they have to start saving money, but they're not. This can be a way to forcefully make yourself do that. I guess you want to look at it that way for the future. And that's a situation I've personally been in before, where I realized, man, I got to do something. I got to force myself to start doing something different. So those are some very common reasons.
Linus is calling me special.
Yeah, Linus, we wish your computer was working, but so Linus is saying specially designed by special people.
I like that.
Hey, just real quick, I don't know if it seems like some of these folks haven't even seen the presentation yet. So can we link that, please? Y'all, that's where I would start first. Watch that 90-minute presentation. And yes, you got 90 minutes of time because this is regarding your financial health. So you can turn off The Bachelor or The Voice just for an evening to watch the presentation. But link that presentation video, and that's the first place that I would start. Start there at the presentation. That's requirement number one. Or read Nelson Nash's book, Becoming Your Own Banker. Those are the two things that you got to do in order to talk with a mentor on the team. So can we link that presentation maybe?
That presentation is there, actually. So if you go to mentors.beyourownbanker.com, at the bottom it says step 1, watch video. Just click that and it pops right up. Kind of keeps it all in one spot that way.
Yeah, and if you want to be efficient with time, you could book a call and then just make sure you watch that video before your scheduled call.
Wow, I like that efficiency.
Yeah. And then I just want to give a shout out to Diana, who says, hello to the team. Got my first loan from my policy thanks to the team.
And say hello to Diana. Diana's over in Ocala, so she's awesome. She's got a group of church members there. I went out there and spent a Saturday with them. They're awesome.
Lovely. And then shout out again to this girl who has a cat photo, Chris, so she definitely is at the right place. But she says, the moment I turn 18, I'm calling you guys. How much does it cost to start a policy with you?
Yeah, there's no cost. I mean, just book a call with us and then figure out how much you want to save. I mean, most people, it'd be awesome, to work with somebody your age at 18. If you're saving money now, then you're ready to go. There is no cost. It's not like you're going to write us a check. The only check you'll ever write is the check you write to your own banking system, the policy. That's it.
Yeah.
Love it.
And that's a big thing too. A lot of people think that they're handing the money to us. No, I mean, your premiums are always getting paid directly to the insurance company. Loans are always being made directly from the insurance company back to you. I mean, we are just that middleman, that servicing agent, technically, because like by textbook definition, we're just life insurance agents. That's all that we are. But we're 100% this infinite banking concept. We're IBC practitioners. So this is all that we do. But your contract at the end of the day is always between you and the insurance company. You pay premiums directly to the company. Loans get made payable back to you directly from the insurance company, and there's no middleman handling there.
But we're specially designed life insurance agents.
Yeah, you're specially designed, all right, Brian. We're all a little
Stepped
special.
into that one, Fal.
Yeah.
Stepped into that one.
Okay.
Yeah, Shauna, one quick thing. I don't know if you've got the link tree, but She Did It might be find some value in all the things we do throughout the week on the wealth webinars, the Tuesday Take Back Control.
Yes.
So it's also, in the meantime, just keep getting educated and learning more and more about this process and what's going on behind the scenes.
Yeah. So for anybody, this is kind of like our weekly schedule where you can find one or all of these people from the team pretty much every day except for Friday. We are available. So if you click that little link tree, it'll give you our whole schedule. Just stay around what we call the campfire. James is asking what will be talked about this weekend, but I think he means next weekend at the virtual 2-day. And then before we get into that, I want to talk about the virtual 2 days, a really good like introductory class, I guess you would say, all virtual from your home. And then Hannah has an in-person event in October or November? October. So what will be talked about?
Shauna, link the mastermind registration page if you don't mind.
I will. But what will be talked about next weekend first, virtually from the comfort of your own home?
And Brent Kessler will be there. Pops will be on.
Heck yeah.
Yeah, he's taking a break from lobster diving for us.
He's so extra, isn't he?
Extra special.
Anybody? All right, advanced topics. You want to talk about what? Someone give us the rundown about what's being talked about next weekend.
Did you?
I heard this guy's gonna talk about buy term invest the difference, and he's gonna poke the bear and do a bunch of stuff like that. I think that's something that's going to be talked about. I heard this. I don't know if it's true, but that's what I've heard.
Oh, it's happening. It's going down.
Craig is
Be there, be square.
Crack the code, man. Like you buy term invest the difference, folks. Beware. Like, we're going to mathematically prove that you've been wrong the entire time, and it is going to hurt. It is going to feel like something with anyway. I'm going to stop right there.
And again, I put in the chat Hannah's mastermind. So that's next weekend. That's virtual. And then Hannah's mastermind is in October, and we will all be there. And we are much more fun in person than we are virtually. Noah Harris, Coach Noah Harris from PMC is saying, hey guys, I'm taking over a policy from a family member. It seems pretty straightforward. Is there anything I need to know?
Who wants this?
That's how you started it. This is how you start with your aunt.
I mean, anything you need to know? Yeah, like hurry up and sign the docs, man.
Before they change their mind.
Yeah, I mean, sounds like a pretty nice gift. I mean, I don't know what kind of policy it is, but no matter what, even if it's like an old whole life, I mean, that's like gold. It's pretty straightforward. Yep, just get the ownership change done and giddy up and go.
And here's my advice, Noah. If you're like purchasing the policy, because like sometimes just like to incentivize that other person, hey, why would I sell this policy to you versus surrendering it directly with the insurance company? I would offer around 10, 15, 20% over that surrender value to that person to take over the ownership. But before I would pay them, make sure that the ownership change happens and that's done, and then release the funds to them. Because you don't want to be in that pickle where, oh crap, I release the funds to them and then I still don't got the policy. But you would just be the owner. That's all that's happening. It's essentially just an ownership change on the policy. You are now the new owner. You have 100% control and responsibility of that policy. Or as Nelson likes to say in the Willie Sutton law, the one who has the gold makes the rules.
Love it.
It is the truth.
And then Albert just said, just opened my first policy, and Brian is my money mentor. Hi, Brian.
He had a question as well. If you look at a couple things before.
Yep. All right. Albert saying, hi guys, my annual premium for me is $3,600. Policy illustration says $1,811 net cash value after dividends. Why was I told that $1,650 is available in the first month rather than the 1811.
Let me take this.
That's an easy one.
Albert, this seems like a damn good problem to have because we like to underpromise and overdeliver. All right, I got an extra $200 I can use for my policy. Sounds like a damn good problem. All right, sorry.
And also, his is new, so it might not be fully funded yet, too. It's very new.
Yeah.
And I think he's talking about the implementation meeting. I believe that when they're doing the spreadsheet, because I looked at this the other day, I think they're doing it at 90%, like what's actually, because
It's always 90%.
that's how it's taught by Nelson National. We're showing that it's at 90%, right? So you have a little bit more available, but we're teaching you to take it at 90% and leave a little in there. So.
Well, the reason that that's the case, if you want to go that far, as to why do the insurance companies only give you access to 90%, and that's really for your own protection. They're protecting you against your own means. That is so that they keep some cash value in there in case for some reason you missed a premium or something like that. At least it's got some extra cash value to, like a reserve. Think of it as like an emergency fund. That's what that's for, and that's why the insurance companies do that.
Yeah.
They're not keeping that money. They're just making it so you can't take 100% of the cash value out. Now, I hate to go back to the CV line of credit. That's another reason at my level, and I'm not suggesting CV lines of credit for anyone. I think they're terrible because you pay way more, but it does give me access to an extra 10% or I'm sorry, 8%. I'm at 98. Yeah, I'm at 98%. So I get to access 98% of all of the cash value to its utmost level. So it just gives you that little bit extra as well. And
It's interesting.
it's interesting, but Hannah, we could make the argument that Hannah's like, still, that's not worth the extra interest you're paying. And she is absolutely correct. It's just a complete convenience thing. And because of how I use them, that it makes sense.
All right, I've got a question here, and then I don't know, Chris, if there's any Instagram questions, but Deborah is saying,
No, they've been quiet.
Can you convert IULs or terms from other insurance companies to your carriers to self-direct whole life?
I think that's specially designed.
Oh, specially designed. Thank you.
But yeah, the answer would be yes. Some of the term policies, we would just have to look to see who the carrier was, but we do have some carriers that will take other people's other carriers' term policies and convert them. So those are all options. It's called when you're converting or moving a policy's cash value from one to the other, it's called a 1035 exchange. So so we can exchange that in, but we'd want to look at what you have set up before we just do that, and make sure it's the right move for you.
And your agent and insurance carrier love when you go ask them for a in-force policy illustration. They might stop talking to you, but that's the first thing. If you have an IUL and you want to see what the options are, that's one of the things you'll need to get, Deborah.
Okay, and I guess while we wrap, if you go to mentors.beyourownbanker.com, you can schedule a call with us. That 90-minute video is at the bottom of the screen. Anything else? Did I miss anything?
No, outside of Skynet is watching us all. All right. Well, with that being said, folks, sorry I wasn't here for the early part. We have no idea why it wasn't working, but we will be back and we will see you on the next one. Thanks for joining us for another Ask Me Anything happy hour.